Many have described 2015 as a tough year for equities, but for one man, Raamdeo Agrawal, 2015 has been a rewarding year. His investors have made money, and Motilal Oswal, the flagship fund, has beaten the index in a very handsome way. Let's ask him what 2016 is going to hold for all of us, for the markets, for investors, for you. Raamdeo Agrawal, thanks very much for your time. Great to have you with us here. How would you describe the year? Has it been a very good year, 2015? Or
yeah, it started very in an exciting way. You know, Modi Sahib was there, and a lot of still excitement about new government was there. A lot of promises, and and FIs were still bullish on India. And then somewhere along the line, FIs started selling. Some global macro call, and they started reducing their weights on India, and that started cooling off the market. And then actually only the weighing machine, I mean, where actually the companies which were doing well, that only did well. Finally, all the bad, what I call the stocks which had moved up, they got kind of settled down. And finally, the companies which deserved to win, they won. And hence, there was a massive, Samudra Manthan type of stuff, where commodity companies, they went way out.
Washed away
completely with the global meltdown of the commodity, which is still on. And then the companies which got benefited out of this, they really won it big time. And the portfolios which were aligned to this particular big trend, which was happening for 15, 17 months, I think those portfolios did very well.
Would you say that the one or two themes which will carry on into 2016? The biggest change actually is the commodity price collapse, right, in 2015. And some believe it is here to stay. This is the new normal, at the risk of sounding wrong tomorrow. But how would you see it?
So a lot of things have changed. I think it's a very decisive change. Whether it will become worse, it will become stabilized. But I think it's a different world altogether. I mean, first decade was marked by commodity boom, and this decade will also be characterized by decline in the commodity prices. And first decade also saw a rise of China. This decade is starting, say, 15 to next 10 years. Will it be again America and China, or will it be India also? So that possibility is there. I mean, under new leadership, the world wants India to happen. India is also trying very hard. Will this, kind of intentions somewhere fructify to, I mean, there is an opportunity for India, because one of the handicap was our current account deficit.
All that is gone.
All that is gone. So we are in a very sweet spot, and now it has to be done by us. There is no external, challenge.
But when we talk about commodity price collapse and those things, when commodity prices were high, they were also in a way accompanied by not growth, but prospects of growth, right? Commodity prices are high for a reason. When commodity price collapse like this, that is also for a reason. That there is lack of growth or prospects of no growth. So in that way, the environment also has become challenging.
Yeah, so yes, what you're saying is right, but what happens is that it is not only about growth. I mean, we are talking about, at this juncture, we are talking about the global growth. So it is not only about global growth. See, last decade's global growth was 70-80% of the global growth came because of China's rise. Now, when China rose, I mean, as an emerging market, a poor country becoming a mid-income country, you need a different kind of a raw material, so to say. It was on the back of manufacturing, on the back of infrastructure, massive infrastructure build-up. 100-200 million ton steel consumption went up to 800 million tons of steel consumption. So it was characterized by massive growth in physical stuff consumption. And and then the world was not ready to supply those kind of quantities. So there was massive investment to supply that particular product. And hence that was the first decade. And now there is enough of supply, and the world is ready to supply much bigger quantities of commodities and all. So now the markets are saying that, okay, you've done it, my job is over. Now let me move to something else. Okay, what is that something else? That only time will tell. So as a businessman, the corporations, say like all the digital world, I mean, that is becoming far more, I mean, every aspect of life is being, impacted, and huge corporations. Look at the corporations which are winning in US. I mean, whether it is a Netflix, whether it is a Google, whether it is Amazon, I mean, they are becoming just larger than life. What took Exxon and all maybe 100 years, 200 years, 100 years to become what they are.
Yeah.
I mean, they are creating in 10 years, 8 years and all.
Yeah.
So I think this is a new norm in terms of digital economy. India is also seeing resurgence of a lot of startups and all, and we are also talking about 1 billion smartphones in this country in the next 3-4 years. So, I mean, a lot of new opportunities will come up.
Can Indian companies, do you expect Indian companies to start doing well once again in 2016?
Yeah. See, in India, a lot of companies are doing well. At the same time, a lot of companies are also doing badly. So when you look at the composition, we make about 4 lakh crores profit every year at a corporate level. And with 23-24 P multiple, the market cap is about 95-97 lakh crores. The question is, who makes that 4 lakh crores? Earlier, 1/3 of the profits were made by commodity companies. They have become zero. So obviously, still 4 lakh crores we are making means non-commodity companies have made up for the loss of the profits from commodity companies. So clear, but then when you add up both, there is no growth, and that's why index itself has not moved. Okay, but there are massive number of companies which have gone up by 40, 50, 60%, and there are a whole lot of companies which have also gone down by 100%, 60, 70, 80%. So it's a mix. Now, are we seeing in 2016 or 17 a shift of new level of profit for the corporates? Is 4 lakh crore barrier is broken, and are we seeing 5 lakh crores coming in? I don't see it. At this juncture, the given current inflationary environment or high interest rates, so slowdown in the global trade, I mean, our EXIM is in very bad shape. 25, 27%, export decline, 30%, import decline. I think it will take some more time. I mean, it will happen, maybe in 17. But right now, if you look at 6-7 months, what one can kind of, I don't see that kind of energy.
So for our viewers, and I mean, you're a stock picker, right?
Yes.
I mean, you're a follower of Warren Buffett, who's famous in saying that I don't look at interest rates and macro and global trade and all of that stuff. I look at companies and prospects, and that's what you do as well.
Yes.
So what's your assessment?
Yeah, so there we have a massive opportunity. Yeah. I mean, actually we have more ideas than money. So, I mean, last year also we made good money.
Right.
And you see.
So tell us where do you see the opportunities?
All the beneficiaries of commodity collapse are all the companies which are benefiting right now, and benefiting handsomely. I just had a presentation from one of good analysts on the gas sector. Okay, I mean, gas prices globally, I mean, what used to be $15-17 have come down to $5-6, and from March and all, it is going to go even below that, because US is at $2. So, I mean, another $2.5, $3 of transportation and gasification, and at $5 they can deliver American gas to Indian shores. So this gas revolution is going to happen. Okay, and that means lower cost of production for many things, like your power, for your CNGs, then your whole lot of industrial fuel and all, and that will be very deflationary. So a lot of things are happening. So in that segment, all the companies were in bad shape. So there will be companies which will do very well. So you have to find ideas one after other.
No, so that's the theme that you identified in a way.
No. I'm saying that because of the collapse of commodities, a lot of things are coming up, which will, a lot of companies will benefit. A power company will benefit. If he has 3,000-4,000 megawatt of power plant and it is starved of gas and it is mothballed. So you've done the capex, but there's no earnings coming through. The moment gas flows, you will start making money on 10-15,000 crores. So obviously that is not there in the price of the stock. Whenever the gas comes, when they make money, the stock will move. So we have to find one by one opportunities like this. And in 3-4 months, 5 months, if we get one big idea, say like in aviation, we got Indigo came, this thing. Still, they are growing at 20%. I mean, the industry itself is growing.
Did
20%.
You put money in?
Yes, we are the most aggressive buyers, in the stock, and it is allocated across our portfolios. So
you continue to hold
yes,
stock and
yeah. So so opportunities will come one by one. Good IPOs are coming in, and say Alchem came.
I mean, actually,
or,
the primary market is much more welcoming of stocks than the secondary market, right? I mean, maybe it's just the kind of ideas which have come, where there was scarcity or whatever, right? Lal Path Labs, for example.
Yeah, so good ideas are coming in from IPOs or even in the existing ones. I mean, this oil and gas sector and all entire energy segment, entire beneficiary of commodities, say all the say FMCGs and also. Their
just one thing, let me interrupt you. I'll come to FMCG, but this gas price commodity in the energy sector, what kind of ideas are we talking about? I mean, who benefits really?
Yeah, so say gasification companies, transportation companies, say Petronet LNG will have, I mean, they cannot gasify so much of liquid cargo will be available. Then next will be the pipes guys, GSPC or GAIL or those kind of guys. What is happening is that even in refining cost itself will come down. See, earlier when you have a 5-6% cost of refining, so you are using the crude, so that was costing you say $5-6-7 of refining cost by way of fuel. Now, if the oil price itself is down by 60%, in that case, refining costs also come down from $6 to $2. So that $4 is extra benefit. You know, so I mean, you have to. I mean, this is a $2-3 trillion bounty. That $4 trillion commodity has become $2 trillion commodity, or less than $2 trillion. So that $2 trillion will show up somewhere in some balance sheets, some consumer pockets. Bulk of it will go in consumer pocket through petrol, diesel, but at least 1/3 will go into the corporate pockets. So we have to find which are the pockets where it will stay, which market has not figured out, and you have to be ahead of
FMCG, for example.
FMCG, all the packaging costs, a lot of raw material costs will come down. You know, in tire companies, rubber prices like half or below 60-70%. And you have not reduced the tire prices by, I mean, say even 20-30%. Probably prices same. You have not raised the prices. So the margin has clearly expanded. We have never seen double-digit EBITDA margins in the tire companies. So what I'm saying,
just about, I think last quarter 10-11% for one or two companies. It got to it, but
no. I mean, tire companies are
now we're talking about sustained.
Yeah, so that's where you have to figure out where it is for 3 years, where it is for 3 months, where it is for 30 years. I mean, those are judgments you have to do. So in investing, quality of business management, growth, longevity of growth. You have to figure out how long the growth is going to continue. Every company will have a longevity of growth differently.
But here we are talking about essentially the underlying theme is beneficiaries of the commodity price collapse, right?
Yes.
That's what we're talking about.
Yeah, so beneficiaries also, it could be...
And how far will the sustainability of the benefit?
Yes.
Right?
Yes.
So we are in an environment where top line growth is very muted.
Yes.
Right? But gross margins will expand and some companies will see that flowing through down to
all the automotive companies. All the automotive companies. They are, I mean, their 68-70% is their raw material cost. Whether it's steel, aluminium, castings.
You mean OEMs?
OEMs themselves. I mean, any motorcycle company or car company you take, roughly the raw material cost is 70%. Now, in 70%, if there's a 5% or 7% value-added savings of components, if that comes down by 5%, your net margin will go up from 5% to 10%. So, even on no growth on the top line, actually your profit should double. So, if you have a 10-15% top line growth, 60-70% bottom line growth, stock will move. So, we have to find...
I mean, in autos, for example, we are at the cusp of the third quarter earnings. What one is hearing is that numbers aren't going to be great, for two-wheelers at least. I mean, and
volume expansion had not been good, so we have to figure out where exactly. I think margin will still be pretty good, but volume has been very, very static.
But do you think this the margin expansion, which we've seen in companies like Maruti, etc., that can drive stock performance?
That will. I mean, eventually you have to find the companies where earnings are high quality, earnings are there, and that is growing at a steady pace, and that will determine your stock movement.
What else? I mean, any themes that you think one should be bullish on? I know it's not a 2016 interview.
I know. So the whole idea is to keep finding. See, this wealth creation study we did, 20th wealth creation study, bit to mega. The whole effort was to figure out how to anticipate growth and calibrate growth and build into the price. Okay.
Sure.
So how to anticipate growth? So we realized at the end of it that it is very company specific and it is very time specific that the growth happens. So like Indian IT, when they started in early 90s, 92, 93, at that point of time, maybe the total export from India must have been say $200-300 million. $200, $300 million. Okay, from there to become a $100 billion export, just in 20 years flat. What kind of industry compounding we are talking about? And in that, the best company, Infosys, to go from a 50 crores market cap to 2.5 lakh crores market cap. You know, and there is so much more to happen. So you have to find those kind of spots. What's happening in the globalized environment? Where is the big opportunities coming up? You know, so right now.
You told me you have more ideas than money.
Yes, clearly.
So I want more ideas from you.
No. So you know, I'm telling you, I'm very optimistic that every 2-3 months, if you keep looking for one, you will get tailor-made ideas. The issue is that you have to say no to many ideas which come every day. Saying no to say hundreds of ideas in next 90 days is far tougher than saying yes, to one of the ideas.
Right.
So you know, you get lured by marginal ideas which come on the way. You have to keep looking for a fat pitch, you know, where high quality, high growth, longevity of growth, and at a very reasonable price, you get one. So to get that particular combination at some, I mean, most of the time markets are very, very focused on this kind of companies, and they price it very, very well. But whenever you get that opportunity,
some mispricing.
Mispricing of growth or mispricing of quality.
We spoke about some sectors, but identify 5 absolute big winners which you think will play out
it's very tough
over
to
a period
out.
of time.
No, I don't
I'm not asking you for a 1-year focus.
No, it's not 1 year focus. See, the point is that actually it is when you buy the stock, you think that it is going to double in. My whole thesis is, will it double in 3 years with very limited downside? First thing is downside. I'm scared of losing money. So I don't want to lose money, even if I make a little less.
So I'm simply asking you, which are the stocks which you think will fit the criteria? And you have the right, I mean, everybody has the right to be wrong.
All the stocks in my portfolios, you know, they're all the stocks which have equal chance of making money of doubling in 3 years. Otherwise, I would not keep them there. Okay. So
the 35 portfolio.
35 or 44. We have across the AMC, we have about 50-55 stocks. So all the stocks have that potential that in next 3 years, 4 years, they should double with very limited downside. Okay, we have a strong presence in aviation. We have strong presence in oil marketing companies. We have a lot of consumer companies specifically. So auto companies, we have 20-25% auto companies. So I mean, individually, all these ideas, they are very, very promising. But what happens is that we are also not gods. We also go wrong. So out of 18 ideas, at least 6 ideas will disappoint us on a 1-year basis. When we meet in December, we'll realize that 6 out of 18 ideas.
But that's the nature of
the
not
one. That's the nature of the beast.
Yeah.
Okay, but 6 will do much better than what we thought, and 6 will be average. But my downside capture will be very, very good because only 6 will disappoint me, and 12 will do very well. So as a portfolio, it will work very well. But which 5 ideas or which 3 ideas will do very well, I actually don't know.
What do you think? You think in terms of events, event-driven stuff, budget, of course, is
so the moment New Year comes, you'll again have tamasha of GST and budget. So that will be completely political, but it will drive the sentiment of a lot of people. A lot of media activity will happen, and hence a lot of people end up allocating, you know,
money in the run-up.
Yeah, and then second is of course the FI, what the global macro tells for them. If they think that
any thoughts on that, by the way?
It's very tough. I mean, this entire thing is so complex, and more complex than the situation is the complexity with which they run the stuff, you know, the allocation machine. So still, I mean, we don't see that energy. The Santa Claus rally or year-end rally is not there. So how long they'll take to come back?
But the market is up 5% from the Fed decision in rupee terms. It's up 5-6%.
In India? Yeah. So obviously the event is behind, and after that we have seen at least the selling has kind of slowed down.
Stopped, yeah.
They've not been buying, but they have not sold that much. So let's see in the new year whether India is a hot favorite globally, or I think here some turnaround should happen. I mean that, of course, we keep saying that we are 7.5% kind of growth, economic fastest growth, but I think something is amiss in terms of ground realities, in the sense that it doesn't feel like 7.5.
It doesn't gel.
Yeah, it doesn't. Somewhere something is amiss. So once little more participation is there from investment side, capital goods companies getting order left, right and center, cement growing, credit, bank credit growing, power consumption growing. So I think
there are lots of large sectors. I'm not talking about commodities. Commodities, of course, all got washed away because of the price collapse. But there are large other sectors which are also at 1 year, 2 year, 3 year lows. Large sectors. I mean, more than completely depressed, out of favor. Do you think is there any chance that any of those sectors revive?
Yeah, so I talked to you about the gas impacts and all. So all this entire gas transmission, gas distribution companies and all. So they were in bad shape because just the cargo was not available. Raw material itself was not there. What do you distribute? So clearly, if the $18 comes down to $5, $6, there will be a whole lot of companies which will benefit, and we cannot even count which are the companies which will benefit. Entire power segment will benefit. Entire ceramics and all those who are using gas directly, they will benefit. The transportation companies will benefit. So, I mean, there will be hundreds of companies whose fortune will change. But getting 1 or 2 large enough companies and putting in the portfolio, that is more important.
That is
well-managed
tougher
company.
as well.
Yeah,
but others, I mean, power, for
research.
example, banks, I mean, there are lots of other large sectors
so if
which
power
are
sector
very
turns
depressed.
around, because of lower fuel price, the losses will definitely be coming down, and hence their balance sheet will get repaired with this Uday and all. If by chance we are able to turn around the power sector in next 12 months, in that case, stress on the public sector banks will reduce significantly, and that can have its own repercussion. So it's a very...
But by the way, none of the power loans are NPAs. Not 1 rupee is NPA.
No, you might not call it NPA, but the stress is there. See, if a company...
Fair enough. So that's why I guess the scheme has been announced.
So as the moment they get kind of classified and they start getting their cash flow in terms of interest or whatever, it will show up in the strength of the banks.
What kind of... do you have any return expectations? You manage public money as well. So what do you tell them?
Yeah, so we promise them double in 5 years and we manufacture for 3 years.
Raamdeo ji, thank you very much for your time.
Thanks.
Great speaking with you. Appreciate it.